Welcome back, viewers. We're here with Afro Kinks, and we're looking at her beautiful range of natural hair products. And we were asking you, Rose, before the break, what is the value? Frank asked you what's the value of the business. And it's important for you to separate this product range from the salon.
Okay.
And treat them as two very separate businesses. So if we had asked you the value of the salon business, even if you can't give us a figure, you'd know how many hair dryers you have. What do they have in? It's a long time I went into a salon. What do they have in salons these days? The chairs, the sinks, and then of course you would look at your. Frank can explain this better, but you look at, if you take, let's say, your books for the last 2 years, you know that every month, let's say you make 20,000 cedis. So over time, somebody can use the discounted cash flow method and say this is the value of the business. Now, the challenge you are having with giving us a value for this one is that you have not separated it. So where do you produce?
In our home.
In your home? Is the salon also in your home?
No, please.
Okay. But you make this in, but that's how Carol's daughter started, and it's a huge brand worth billions. So you produce this at home.
Yes, please.
Okay. So how do you go about it? Tell us.
On demand.
So if Charlotte comes and says, I need 10 bottles of shampoo, then you will produce 10 bottles of shampoo.
For now, we have the proceeds from the salon, which I'm not going to do now. We're going to separate it. So we have, let's say, quite a number which we have sold from the launch.
Okay.
So all of them are sold. So what we are doing now is, lately somebody said she wanted 20 cartons.
So you go and batch produce that?
Yes, please.
That's not really bad. There's a name for it in operations management. It's not really bad because you're not tying up money. So that's good.
Stock.
But how does a salon get products? Does the salon buy?
No. We use them.
Okay.
We use what we produce and then we use on the clients.
Okay.
And so the assumption is that anybody who walks into your shop, your salon, uses your products.
Yes.
Okay.
And they pay X amount for the service.
Yes, please.
Do you take that money out? Do you take some of the money out of the money they've paid towards products, the product cost?
No, please.
Okay.
So the salon is really.
Yes, the business.
How did you say it? She's subsidizing people's bathing. What was the line in it?
yeah, subsidizing people to have your hair done. Yeah, so okay, so I think going around the discussion has been you need to separate this business and see it as a business and the salon as a business. Because what you have now, it could be a model that you can develop, but it means that in order for you to expand, you always will you have to have a salon attached to it so that your customers will go there and they use only your products. You have to make that decision whether you want your salons, you want to run let's say a chain of salons that uses a very specific product that's not out there for the market. Or you want to have a conditioner and cream business on its own that other salons can adopt. You need to make that distinction. Then based on that, you can build the remaining strategies. Because currently I can't tell you, and you can't tell me the worth of this thing that you have done, but it might be worth millions.
I see a lot of value she's not releasing. Because
You're
the
not
other thing too
releasing.
is, doing the just-in-demand production may make sense because you're not tying up capital. But it's also limiting the growth because it also means that I can't just walk into any shop. And when I want shampoo, I'm not going to call you and now start saying, can I have shampoo? I want to walk into a shop and pick shampoo. And so you are forcing me to pick substandard brands or brands that are not as good as yours because it's not available. I think Petra has it should be available because there are so many other options, but I should be able to find it easily. So if you're not putting in money into producing and stocking in shops, how am I supposed to get it?
And,
So there are
and
three-
you need
okay.
customer base that is loyal to you. I don't know, but the women, I'm sure before they adopt a product, they want to stick and be consistent to that product. So if they can't always travel to your salon to do their hair, then means
Yes.
that they can't use the product.
And if
or
you're like me
adopt
and you
it.
don't go to salons, then you're cutting me off. Not fair.
So
I'm taking this personal.
please remember 3 A's in this conversation. Accessibility is important. So you have a wonderful product, but how do customers get it? You have to think about that.
Yeah.
You don't only have to limit it to just yourself. At the beginning, it's fine. But as you grow the business, think about how is it going to be more accessible to more customers. The second A, so it's accessibility. The second A is availability. She spoke about the fact that if you walk into, you want to solve a particular problem, the first thing is, where can I find it? What product do I want, first of all, and then where can I find it? So giving customers more options to be able to have your products available, where can they get it from? And then the third thing will be the affordability, so the pricing. We'll talk about that later. But you should consider those 3 A's as very important to how you grow with the products. Accessibility, affordability, and then availability. Those 3 things are very, very, very key. And then the other thing is, if you're going to be using it as product in your salon, you're sort of limiting the accessibility. I have to come, your salon is in Tesano, right?
Yes,
I have to
please.
come to Tesano to be able to use
So
it.
what if the person is in Tamale or Kumasi?
Or abroad,
Yeah.
and they want to use it, then you have to start thinking about how do they get it as well. So it's a journey of making it more and more convenient for more people to get within that group of people who you're trying to satisfy. And it has to be consistent, it has to be intentional, that you do that over a period of time. You mentioned the fact that you're using, so you have a very good thing that you have your customers to try the product on. So this is like having an immediate constituency. You just go, and you don't have to convince them too much, because they know you,
Yeah.
they know your salon, they
There's
know
the trust
brand.
already,
There's the
yeah.
trust. But that group of customers now has to be the base to expand. You shouldn't just focus on just them, as these are the customers who use the product, but other people who don't necessarily come to your salon also have to become customers. And then the base customers become your ambassadors. They become your advocates. They should tell the story of how good the product is and how useful it has been to them. So we need to begin to think beyond just the immediate salon
Yes.
to a broader customer base, but still in this special group of natural hair people. Yeah.
My little add-on is that, well, maybe you have a very good packaging here, and rather I was expecting that you are selling rather than limiting it to use to
Yes.
your, because if you have all this packaging and it can only be used with you and your customers who know you, then maybe you are even wasting value in terms of cost of putting up that
The package,
packaging.
it's true.
And
Because
being
this can be in a
consistent.
simple gallon.
And the person knows it, you know. So
So like a salon range.
Yes.
Where, and some the big brands, they have that. They are usually a product range they do for professional use only or for salons, and it may even be higher content of whatever. So you can actually create a whole different range for other hairdressers. But again, it comes back to what we're saying. It's really about your positioning. If you position yourself as the expert and you're even training other hairdressers and showing them how to use this, some of these oils like for steaming locks and all that, then you can now sell to them, and then they will have the little ones that they sell in the salon for their clients to take home. I don't know if it's is it helping?
Yes,
is it making
please.
sense?
It
Yeah.
is. It is helping.
But
So
we
in
need
a
to look
year-
at her numbers, because she specifically asked for help in that area. I mean, when I'm looking at the challenges you mentioned, you said managing increasing demand. I don't think that's the problem. I think you are the problem. You are the one not supplying. The problem is low supply with high demand. But you specifically talked about help to keep proper books of accounts. And I think with the kind of background we have, Frank may be able to, with all you've said so far, help you a bit more in that area.
So look, it's a challenge for a lot of businesses, but it has to start at some point.
Yes.
So,
And you're at a good place, really. Let's start with her creating the separate entity, and then we take it from there. So it's
From
like
there.
a clean start for her. Yeah.
So if you create a separate entity for this product, now you come out with clear prices for the product. Don't combine it with the saloon services. Okay. So once we have prices for the product, if someone comes and even uses for the person, we know how much whatever you've used for cost. Okay. And then now you start with, the day you do your incorporation, you start with, what was
Frank,
your position?
hold up. I think
Okay.
you need to roll back and really start her on a plain sheet.
Okay.
So take a plain sheet and let's take a break. And when we come back, we go like plain, like
Okay.
ground zero,
Okay.
in terms of the keeping the, because it's really important for every small business in terms of keeping your accounts from the beginning, from the scratch. Because you're even talking about pricing. Let's help her figure out what the input cost should be before she can figure out the pricing. So we'll take a break, and when we come back, we go into the mathematics in the finance section, yeah? So please stay with us. I think there's a lot to learn here.
Immediately the product was actually introduced to me, I wanted to get on it, and that was the Gold Check account, guys. This has actually changed my business. So on the First National Bank app, you have the business toolkits that gives you all the information that you need to run your business, and whatever inquiries you have, they're always ready to answer. And that makes life very easy for me. And you have the in contacts that helps you access every transaction that takes place or happens. Now, point of sales terminal, I mark it wherever I go, and so I love to have that so I can take payment, especially with those who tell me I do not have cash. A bank that understands that you can start life all over again or start a business from scratch. Very keen on running it and making sure that you grow to the core. It's one you should look out for. My name is Jifa Bekwe Gray, the CEO of Jifa Gray Creations. I recommend that you sign up to the Gold Check account from First National Bank for a great banking experience.
Whatever the occasion, with ATL, you can never be out of style. ATL, bringing fabric to life.
Welcome back, viewers. So Rose has got her clean sheet of paper. We're coming to start the process of building an accounting system for you from the get-go. And I think this is useful exercise for everyone who has a business going or wants to start a business. So first thing is, we're saying we suggest that you incorporate a limited liability company. And why we say that is so that any liability that comes from the use of this product, accidental use, mistakes, whatever, it protects, it doesn't affect your personal assets or the assets of the salon. So separate the salon from this product. So okay, so let's name the business. So we're doing Afro Kinks what?
Hairline.
Okay, Afro Kinks hairline. Okay, so that's the business name. Okay. So Frank, what are the costs that she's going to be looking at, which become the capital of this new business?
Okay. So we've said that incorporate a business. So we are assuming you are going to do a limited liability company. So On the day you incorporate a business, because you already have a business running, and you are transferring that business assets to this entity, you have to first do what we call the statement of affairs.
This is how they complicate our lives. Frank, stop. Can we make this simpler? Let's.
No.
So let's assume she doesn't have.
She
she's
doesn't
not
have.
moving,
She doesn't
she's
have.
starting.
This statement of affairs is going to complicate it. She doesn't have.
So once you incorporate, okay, what you then have to do is you have to start keeping your books.
Okay.
So first, keep an assets register.
Okay.
Yes, this is what we
So
want.
the assets register, you go to your shop and say, okay, I have containers, bottles worth 100.
Okay.
I have oils worth that put
Shea
all
butter
together.
bought, which
Shea
is this,
butter, put all together, okay? And then you say, do I owe anybody because I bought some of these things? Put that also together.
Okay.
Take what you owe from what you have, okay? And then whatever you have remains becomes your capital for this startup of this business. So you use that value
Is
to
that clear?
incorporate.
Yes, please.
Okay.
Now your challenge will be how much would you value the things that you have, that you are doing your inventory with. And valuing that will mean that you ask yourself, if you know how much you paid for those things, that's your first thing. If you don't know, how much would it cost for you to get those
So,
things
for instance, do
today?
you have a mixer at home that you use to mix the products?
Yes, please.
You bought the mixer,
Yes.
so you know how much that mixer
Yes.
costs. So those are some of the things that will be assets.
Okay.
You have mixers at home. You have oils that you've bought
Yes.
to produce,
Yes.
and if you know that now you're going to go commercial, so you need to buy more oils. All
Even a
that costs.
dispenser.
All that costs. Yes, you put a dispense. Put all that in there.
So once you do that and you know how much you have in terms of assets, let's say properties on hand in a simple form, and who you owe, you have your equity, and that number is what you use to register your business as your capital. That's your starting point.
Okay.
It's the same as the big word statement of affairs.
Which
Forget
scared
about
all
it.
of us.
It scared you. Sorry, I scared you, but that's what it is.
Okay.
So that gives you your capital, and then you use that for the incorporation. Now going forward, what you have to do, I recommend you keep aside the asset register, which is one, you keep about 4 more books. So you know,
4?
keep, or,
Okay,
you
so
know,
we've
keep
talked
5
about
books.
asset register. Okay.
Okay, keep
And
5
you know
books.
what the asset register is? All your assets.
Oh, okay.
Their cost and when you bought them. So that's your assets register.
Okay.
Then keep one is account receivable. So if for any reason you sell to somebody and you didn't
Rose, it's
collect
not only
money,
you who is scared, don't worry. Accounts
they use big
receivable.
words, but I'm breaking it down. You sell to somebody and you don't collect money, the person owes you. You leave a page for that person.
Okay.
So, Madam Charlotte,
So otherwise, people who owe me,
Yeah.
okay?
okay, bought this item 100. Then if the person comes to pay, you update and you subtract. So at
Okay.
any point in time in that book, if you go in there and you turn every page, you know every customer and how much that person owes you.
Okay.
Okay.
We'll start from today because Petra and I are going to be taking some products. So whether it will be accounts receivable or what's the other one?
Yes. So then also accounts payable.
Payable.
The people you owe. So people bring you oil, you haven't paid yet.
Okay.
Okay. Keep a page for each one of them. And then you write the things you bought from them, the quantity you bought, the price and everything, and how much. You can just create a table. How much you bought for. Anytime you pay them, record the payment and subtract from whatever. So at any point in time, on that paper or in that book, on that page, you know for each customer how much you owe them.
Okay.
Okay. Then the other bit is your sales or your cash book. So if you sell things in cash, okay, that one you have to break them into 2. One section for cash that you receive. So anytime you receive cash for someone buys something, you write in the cash this, and then it's on one side. Anytime you are spending money, it also goes to one side. Okay, so you write what you are spending money for.
So this
Okay.
basically records your cash flow, the cash coming in and
so
going out.
it's your cash book. So you can decide at the end of every month, you would cast how much you receive and how much you have paid out. And then the balance that is left, you check whether that money is sitting in your hands. If not, it's not sitting in your hands, then chances are that you've used that business money for your personal things.
Oh, okay.
If it happens that you use your personal money to invest in a business, go and put it in the receipt side, but note that that's from you as a personal thing. It's your investment. The amount, when you are doing your account, your accountant will decide, or you decide with your accountant, whether you are giving that as a loan to the business or you are adding up to your capital of the business.
Equity.
So put in the receipt before you go and spend it. When you spend, you write on the expenditure side.
Okay.
Okay. Now, you do the same thing for your bank account. So if you happen to have a bank account that you use, you do the same thing. So at the end of every month, you pick your bank statement and you compare with your bank account that you have yourself, and you try to see if all the money you paid to the bank is gone to the bank, all money you've taken out is gone. If there was a difference there, you should know what is causing that difference. And then the bank balance is a number you should note at any particular point in time.
In the era of Momo, how do we manage that?
So the Momo people have a statement we can issue for you. Okay, so anytime they issue the statement for you, it will have your wallet balance and money that's gone in and it's gone out. Now, when you are done, your sales book, it's recording all the things you have sold. Okay, so when you sell to somebody and you even collect money, you just say sales, maybe shampoo, 1 unit. I collected 100 cedis. Okay, that 100 cedis, did you collect it into bank, or you collected it into your Momo, or you collected it at cash? So you know all your sales. So if your sales is in cash, then remember that you have to tie that to your cash book. So all your sales in cash should reconcile with your cash book. All your sales in Momo should reconcile with your Momo statement. All your sales that went to bank should reconcile with your bank listing. So at the end of the month, the remaining is a bit complicated, but if you go to each of these books and you add each customer, the balance that is sitting with that person, you know your account receivable, which shows how much people owe you. Okay, and then your account payable, how much you owe people. Your cash on hand will be in your cash book and your bank book that we kept. Okay, then your sales, at least you can total all the sales you've made in the month. The rest, if your accountant comes in, let's say, even once in a month, if you have this record, any person that has studied a bit of accounting that comes in should be able to generate what we call trial balance for you in about 6 hours maximum, and do your financial statement in 2 hours. Okay.
I saw Petra's look when you said trial balance. So wait, hold up, Frank, hold up.
So that's the technical side.
Okay.
But
Rose, so do you get, does this make sense?
I get it.
okay.
So wait, if I walked into your office now, whether it's in your home or in the salon, how many books am I expecting to see? Little
the
notebooks where you're
sales.
recording.
So different from the sales, and then the cash flow, and then the one for the ones I owe.
Yeah.
The people who owe.
Who owe you?
Yeah.
Account receivable.
Account
payable.
No, so you have the accounts receivable,
Accounts
which shows
receivable.
all the people who owe you.
The accounts
You have
payable.
accounts payable, which shows all the people that you owe.
I
Maybe
owe.
you've collected oils from them or shea butter. Then you have your cash book, which shows all the cash you've received and all the cash you've spent,
flow.
which is really important. So you just note it down. And then you try and reconcile monthly. And then you have your
So
bank accounts. So bank accounts, Momo statements, a place where you just note what has gone in and what you're reconciling. And then you have your sales book, which is all the sales. So that if you did your sales book at the end of the month and there was 20,000 of sales, but you saw only cash received of 10,000, then it means that something must appear in your accounts
receivable.
Yes.
Okay.
Does that help?
Yes.
Okay,
I would
fantastic.
say.
So that's the starting point. The rest is that.
This is
then
starting point two. Starting.
The rest will be that now they will prepare your financial statement, which will have about 4 key components. Your income statement, which will tell you how much you've sold, all the costs you've incurred, and whether you've made a profit or not.
Frank, it's okay.
It's okay. So that's the work
Let's
for your
stop here for a
accountant.
minute.
I think listening to Frank, it just makes me more aware that entrepreneurship is not just the
It's hard
glamour
work.
of it, it's hard work. So when people say they want to go into entrepreneurship, they shouldn't just think about it as, oh, I'm my own
Exactly.
boss. I can wake up whenever I want. But there's actually work that you have to put into running a successful
See,
business.
just listening to Frank has made me tired. I think we need to go take a break and just go and listen to Coach's Corner, get some encouragement and some energy, and then when we come back, we'll continue with this class. But I think this is really vital. It's really important. But we need to exhale, and we'll be right back.
Hello and welcome to Coach's Corner on Business Compass. I am Coach Bell. Tonight's episode is about how to keep a healthy relationship between you and your money. First, consistently set aside some resources for tough times. For example, if your fruit juice business booms in the dry season, do you have a plan for how to keep your cash flow during the rainy season? So good financial planning secures your business's future. Second, keep proper books of accounts. Make sure the books are always accurate. Third, never spend money on things you do not need. And never mix your business money with your personal money. That confusion will result in misusing your business income. Fourth, never sell on credit. And if you do, make sure you chase your debtors until they pay up. Remember, there's a lot of sense in the adage, for credit, come tomorrow. Finally, invest. That is how you grow your money and your business, and that is how you keep a healthy relationship between you and your money. A Ugandan proverb says, "The firewood gathered when you are healthy warms you when you are sick." Make wise decisions with your money. Thank you.
Welcome back, viewers. This is still Business Compass. My name is still Charlotte Osei, and we still have Rose in the studio with us, the founder of Afro Kinks Beauty Products, or is it Afro Kinks Hairline? We're now going to name it after this. Yes, and Rose has an amazing range of products, and we've just been talking to her about how to unleash the true value of what she's holding. I mean, this is a gold mine. This is a treasure, and we're incredibly proud of you and the work you've done so far. So we've talked about marketing, we've talked about the fact that she's a niche, she's segmented her market nicely, she's very clear about who her customers are. Frank has given her a whole course in bookkeeping 101. And we've talked about the need to separate this entity legally from the salon and create a new business entity. So is there anything else you want us to focus on before we do the wrap-up?
Auntie Petra mentioned the client education.
Okay.
It would be surprising to know that somebody got a product and asked me, how do we use a shampoo? How do we use a conditioner? Then I woke up, then I realized that
You were assuming,
I was assuming that everybody knows how to.
I bet you Frank doesn't know how to use the hair deodorizer. He doesn't.
What's the difference? They all look like.
So I would say that you recognize that that's an opportunity.
Yes.
That's an opportunity. So let's go back to what Aunt Charlotte said about have a story, know your story, tell your story. You can start the education, the journey of education with your story. Hello, my name is Rose. 5 years ago, I had a problem with alopecia, and I came up with these oils, and it's worked for me, and I've started making them for other people as well.
And my customers.
And my customers have all these wonderful stories, but I want to share that information with you. And then you start serializing it, and you tell them specific things about specific products, and always tie it back to the products. And it has to be consistent because people will now start going to your page.
If you're going to do it every Tuesday, you're releasing a video.
Every
Let
Tuesday.
it be every
Yes.
Tuesday. Yeah.
And then they come back to you as an authority. So you become the person, the go-to for that particular type of information that they need. And of course, you're recommending your own products. So it really makes it more useful to you. So you're not just talking about anything, but you're recommending a particular product. Or you can recommend particular things they should do. So maybe not
In
just
addition,
products.
massage your scalp.
Yes, what to do, how to keep your locks, to cover it when you sleep, which I struggle with all the time, things like that. So just give
Another range of products
very,
coming up,
very-
Rose. We'll talk.
very useful tips. And the way digital media has also evolved is that people use digital media, or they consume digital media as a solution, as a source of solutions.
Yeah.
So in the past, we would go and we still Google, but we're looking for a lot of information now on solutions from our social media platforms. We're checking. If I want to find a natural hair salon in maybe Tesano, I would type in natural hair salons, and you want to be found.
And I want to see reviews as well.
We want to see reviews, we want to see videos, we want to see confirmation that we're making the right choice. So you have to try and plug yourself into that journey of when the customer is trying to make a decision, and position yourself as the experts in that area. And as you do that, then you attract customers to buy your products, other shops to buy your products,
Okay,
things like
we've
that.
run out of time. What truck should we give to Rose? I think value. I'm thinking value, honestly.
Which one?
Value.
It's right up there.
Or track? I was thinking track.
You're thinking tracking. Has she realized the value of what she's holding, though?
Not
Oh,
yet.
not yet.
That's why I think value up there.
Not
Because I
yet.
think when she realizes the value, then she'll track.
Yeah.
Because I think this business has fantastic
Just
potential.
having the package and the name
Yeah.
itself is value.
Oh, hand it over to her. No, you can give it
Let's
to
do the
her.
tradition. Tradition is tradition.
Because I think that if this is fantastic, really, and that you develop this out of your own experience is just phenomenal. Great packaging. I even feel like the products would work before I even try them, but I'm going to try them and I will send you feedback. But well done, Rose. But please realize that this is wealth you're carrying, and treat it as wealth.
As well. Okay.
Okay,
Thank you.
treat it well.
I want to ask if you'll be tempted to answer a lot of clientele recommendation. Oh, why won't you add this to it? It's a complete set, but I don't know whether you should listen to
Always.
whether
As
you
much
should
as you can.
Feedback is critical.
Okay.
Feedback is critical.
You don't have
but
to do everything they say,
yes.
but listen.
Yes, listen.
Okay.
And then you need
An
to
additional
also track.
product.
You need to track
Yeah.
the number of such inquiries you're getting as a basis of determining a possible need. So
Remember,
if
you're there to make money. People are telling you this is what we want, and you're asking, should I do it or not?
Yeah.
You want to sell.
An additional product.
Okay,
Let's say
so let's
leaving.
answer that.
Yeah.
Let's answer that. So one, it may be expensive or uneconomical to just develop an additional product because someone
said
requested.
it, yeah.
Your work is then to find out who has it, that you
Okay.
can sell to that person and make money. Because as an entrepreneur, your hobby is to make money.
Okay. Sadly, our time is up with Afro Kinks, but we will continue this discussion
After.
after the credits roll. But Rose, thank you so much for making time to join us. Thank you, Petra. Thank you, Frank. Thank you, Fiducia Services Limited. This has been Business Compass with Charlotte Osei, and we're still the GPS for your business. And we look forward to seeing you next week.
My name is Rose Nunya Wechi, founder CEO of Afro Kinks. I got to know about the 3 A's, which means that my product line should be affordable, it should be accessible, and it should be available. I thank the experts, very good grounded experts, and I'm very, very, very grateful to them.